Hey everyone, this is Sean Garrett, founding attorney of Garrett PLC and founder of the Legal Eagle podcast. My goal with this podcast isn't to brain dump complex business law and tax concepts, you know that. Instead, I'm here to highlight some of the entrepreneurs and business leaders in the communities that I serve. I'm licensed to practice law in North Carolina, South Carolina, Illinois, and Missouri. So many of the stories and people that you're going to hear or meet are coming from Charlotte, Greenville, Chicago, and St. Louis. Today, we have Shane Brotherton. Did I say that right?
Brotherton, yes, sir.
Brotherton, yeah, man.
People mispronounce that a lot.
Thanks for being on the podcast. Thanks for being here.
Yeah, Sean, thanks for inviting me. First time on a podcast, long time listener, so happy to be here.
Love it, love it. Well, getting into that, tell us about yourself, Shane. Who is Shane?
Yeah, so born and raised in Michigan, and been down in Charlotte now for almost eight years. My wife and I are both from there. Went to school, Michigan State. Started off my first job being a senior credit underwriter for a smaller community bank in mid-Michigan, Lansing region, which is a good base for me. You get to learn a lot. You do lots of different deals, work with different lenders. It's really like a good core base to start your career off. You learn how to analyze financial statements, analyze cash flow, kind of things to ask, things to understand about a business to help make credit lending decisions. So did that for about 2.5, 3 years and had a few bad winters there were just crazy cold. And my
Yeah.
girlfriend at the time, wife now was wrapping up school. And so it's kind of a fork in the road of, are we going to move to some city together where we're currently at, or are we going to try something new? And so Charlotte being a banking town, warmer climate area, and it's not relatively far. It's about 10-hour drive. So
Hmm.
we thought, I was 25 at the time, thought, hey, let's go move down here. I had a friend that moved here and we visited him and liked the town. And so just found a random job at first and came down here in 2016 and thought, hey, if we don't like it, we can move back. And we've been here ever since. So, and
Awesome.
now currently I work for a regional bank, Pinnacle Bank out of Nashville, Tennessee. We're basically just in the Southeast, all the major MSAs in the market. And we're primarily a commercial corporate bank, but obviously we have retail as well. But
Yeah, awesome.
yeah,
Thanks for that backstory. I definitely want to dive into Pinnacle, and my clients are always asking me questions in terms of credit lending and decisions. So I've got a few questions to ask there, but I want to ask you, what is the biggest difference between North Carolina and Michigan? If someone were to say, not pros or cons, but what's the biggest difference for you, other than the weather? I think that's too easy.
yeah. Well, this is somewhat related to weather, but I would say like just the blue sky.
Mm,
How many days here that you just look up and there's not a cloud in the sky and it's just that Carolina blue pretty much all year. Midwest, you could say from October through April, March, that 6 month kind of end of fall towards end of spring. There's weeks that go by you don't see the sun. And it's
that's a good
gray
point.
and it just affects your mood and even if you're out golfing on a 59-degree day here, but it's that beautiful blue sky, no clouds, it feels a lot warmer and you just kind of feel maybe a little bit better, get more of that vitamin D in you.
Yeah.
So it's kind of that vibe or atmosphere that when you just go outside, it just feels perkier.
Yeah, no, that's a good point. I don't know if you knew this or not, but I went to undergrad in law school in Illinois, so Central Illinois, and go back to visit. That's where I met my wife, and we were there probably October of last year. And we got off the train. We flew into St. Louis, took the train to where she's from. And the first thing I noticed when we got off the train was how gloomy it was. And I looked
Yeah.
around and I'm like, the sun is out, but it's still really gloomy. And
Yeah.
so I
Yes.
know exactly what you're talking about. It's just like an air of gloom. So uh,
Yes.
that's a good point.
That would be my biggest one.
Yeah, solid, solid. And then you brought up golf. Everyone knows that that's probably one of my favorite pastimes. So we'll dive into that in a little bit. Pinnacle Bank. So my clients are asking me day in and day out, Sean, either I'm a new company and I need credit. So we're thinking, small lines of credit, $10,000 to $20,000, line of credit or credit card. Or my clients are 5 to 10 years into business and they're like, Sean, we need some supplies or we need inventory or equipment. We need to take out a line of credit that's much higher, let's say $100,000 to $200,000. And then I've got clients who, me being younger and working with a lot of buyers, they say, Sean, we want to acquire a business. We need to value this business, help us through this process. What are some of the things that people can start doing? And we're going to walk through all three of those, but at the very, very early stages, tell us about a personal guarantee. Tell us about, what they need to do to get those small lines of credit initially.
Yeah, so I guess for a startup, a true startup or a company, call it 2 or 3 years of operating history. If you think of kind of the stack of capital that a company can have, whether it's a first lien senior secured facility from a traditional bank like Pinnacle, all the way down to junior mezzanine debt, all the way down to equity, which is there's no liens or anything, but it's the most expensive in terms you're giving up equity and you're expected to produce a higher rate of return for those investors. So I'm at the very top of that capital stack. So which means we want to see longer length of time and history. We're the least risky, I guess, of all those different kind of ways you can access capital. So for a brand new company coming to like a senior traditional lender like myself, it's difficult at times, most times, because every industry is different, obviously, and have different cash flow cycles, but there's just not a lot of history there. And they could have had a great year or two, but that's not 15 years, or they haven't been through an economic cycle yet, downturn that makes them pivot and shows that they can keep a business alive if their industry changes, or if they're like an online e-commerce company and they're all with Amazon and, Amazon kicks them off or something happens, it's like their whole business is wiped out. So to do something traditionally with a very young company, it's definitely going to take a guarantor, if not multiple, just to kind of get the airplane in the air and get things off the ground. It's going to
And
be probably at a lower dollar amount because, again, the lack of history. And the personal guarantee just helps align interests. So a bank wants to make sure that its borrowers most times has quote unquote skin in the game. And
Mhm.
so if things go badly, they're going to do those owners are going to do everything they can to repay the bank. Because at the end of the day, any
Yeah.
bank, all they care about is getting their money back. That's really it. And so they're going to do everything they can to structure anything to make sure that they have, if not one, if not multiple, at least multiple ways out, whether that's additional collateral, maybe he has, maybe it's a guy that has, or a woman or whoever has a nice brokerage account somewhere, investable assets personally, or any type of cash, they could temporarily tag that as collateral for the loan, just so the business can get some years under their belt and just that rapport relationship with the lender so that they kind of have a history together and a trust that's built over, actually doing business together.
Yeah.
So guarantees pretty much necessarily needed. But I think there's other financing options that isn't a traditional bank that I hear them on TV or Sirius XM. It's going to be it's a step down on that capital stack to more expensive debt, but it's still, it's going to get you what you need. It's going to cost you more. So when you're looking at, cash flow, you've got to make sure that you can afford more expensive debt. But sometimes that's a necessary first step to kind of get things off the ground. Then you can graduate to, a more senior market priced lender that is going to be more favorable. But so it's difficult. You might have to have just personal assets you put in. SBA can be maybe a good route because they're going to have a longer term in terms of like you have to repay this loan back in X number of years. They're going to stretch that out for you.
Mhm.
There's likely going to be a collateral shortfall as well because you're growing and you're probably growing a lot if you're a young company or trying to, and you don't have as many assets to secure a loan you're looking for, or maybe not enough to get the dollar amount you want. So the SBA helps fill in these voids of where a traditional bank can't get comfortable, whether it's lack of collateral, sufficient collateral, or they need the term stretched out longer than what a bank's comfortable. They'll do those things to help small businesses or startups kind of get their feet underneath them and get going, and then they can more so graduate to a traditional lender like myself. And so Pinnacle has that functionality and a great SBA team that's here in town in Ballantyne, and so I've used them a decent amount.
Okay.
So kind of more, what was the next one? More normal or historically operating
Well,
companies?
yeah, so the first one was early stage. I feel like in that conversation you talked about the middle of the road, 10 to 15 years in business, maybe a little longer, going through growth cycles. And then the third stage was clients purchasing businesses, but I feel like that's kind of a similar thought process. What is the business? How is the business how long has the business been in business? And
Yeah.
what's their cash flow look like? But I want to pivot that last question and ask about franchises because that's an interesting one. A franchise, they've got some goodwill, but the entity, the business that my client would be starting has no real cash flow. They've got no history. How do you guys feel about franchises, generally speaking?
Yeah, so it's a specialty lending group. So kind of like SBA. I mean, we have a franchise division that does deals for a segment of franchises, ones that we, I guess you could say, like or have a familiarity with and experience with. I mean, there's tons of franchises. I mean, probably
For
thousands.
sure.
So we're not going to be everything to everybody, but I know franchise franchises to become a franchisee for different ones, there's certain criteria you have to meet from the corporate entity holding co, like McDonald's. They're going to make sure whoever opens a franchise has X amount of liquidity, they've got experience, XYZ. So there's some inherent kind of comfort there. It's not just some guy that just decided he wanted to do this one day and they just, here you go. It's kind of like there's a track record there. And so I haven't dealt with that personally, but I know we have a team that does pretty significant deal sizes for, the Taco Bells of the world or, those types of, or specific maybe gym franchises that have shown, success over the years. So
Mm-hmm.
um, I don't know if SBA type world would help with that. If it's a tiny kind of random franchise that is not kind of household name that is not as tenured or doesn't have as much of a track record. Or maybe personally, if the guy's strong, like I said before, maybe a bank such as a traditional lender could get started with a dollar amount that everyone's comfortable with and kind of just track progress year by year. And as they grow, kind of grow with them from a
Okay.
credit perspective. Yeah.
Cool. Cool. Love that. So what I'm hearing is you guys are more interested in lending on a Chick-fil-A franchise rather than the next Garrett PLLC franchise. I got
It helps. It helps.
it.
And then just to touch on like non-startups, young companies,
Yeah, of
I only speak for me, but not the bank. But
course.
when you start as a credit analyst, underwriter, they tell you about the 5 C's of credit, and I'm probably going to forget a few, but the first one's character, meaning who am I dealing with? Who's the person across the table that's going to be promising to repay me back? What's their history? Have they done this before? Do I trust them? Um, that's like the biggest starting point for me, like industry aside, because there's industries that are inherently more difficult than others or more volatile. But at the end of the day, there's in any industry, there's really good operators, and then there's average operators, and then there's poor operators. So you want to make sure you're just partnering with a high character person that you
Hmm.
trust. And that takes time to develop. It's not necessarily built over like one meeting, but and partly it's proven based on their history as well and what they've done. Um, Another one's cash flow. So another C of credit is cash flow. So as a bank, all banks do this in a variety of ways, but we're essentially measuring historically, does the company generate enough money after they've paid all their bills to pay the loan back and have a little bit extra? Like you don't want it to be razor thin where if they have a few bad months, they're missing loan payments. So you want to see enough there plus a little bit of cushion to make you feel good. And sometimes it's difficult for people to understand what banks are historically, they look historically. They're backwards looking. They're not investors
Hmm.
trying to benefit from future upside necessarily, which sometimes I think people confuse the two or think, well, look how much I've grown the last 4 months. We're projected to do this much at the end of the year. Well, it's like, well, okay, well, you haven't fully done it yet. And his last year end, you did half of what you said you're gonna do. So it's kind of like trust, but it's very much a lot of trust but verify mantra.
Yeah.
So you want to make sure that cash flow's there. Collateral is another one. Um, you know, depending on the deal and the request, you want to make sure that, God forbid, the company goes under. We've got to come in and take the collateral that we're going to hopefully get paid back as much as possible based on those assets we take, which is never the case typically, but you want to have some protection there. Um, and then what's another C? Let me see. Um,
That was four, right? I counted four.
I'm missing a few. Oh,
Okay.
leverage. Another one is like just in generally leverage. I mean, maybe, maybe the cash flow works, but for the amount of money the company's making, the amount of debt they have is pretty high. They have maybe a little, not as much equity in their capital structure, and it's all funded by debt. They don't
Mm,
reinvest much in the building, or maybe the owner's distributing a lot of money at the end of the year to themselves personally. Banks want to see you keep that in the company and reinvest it versus using us to grow everything.
yeah.
Um, so, from that perspective, leverage, if you think about cash flow or EBITDA, however you want to describe it, you want to make sure that you stay under a certain amount of multiples leverage wise, but you don't want to be like 5 times your cash flow in terms of like your leverage. You typically banks want to see it under 3.5, maybe 4. Because at the end of the day, my job is to grow with you. I
Yeah.
don't want to give you $1 million, for example, but if you come to me a month later and you need a little bit more, I can't lend you anymore because you're tapped out. I never want the last dollar going out the door to you to be the last dollar I can give you. Again, kind of
Yeah.
talking about cushion, bracing for an impact, because economic cycles go up and down and they happen quickly. So I want my clients to be healthy financially, so to speak, so that they can borrow more from me in the future because our interests are aligned that way. So I don't
Hmm.
want to make sure I'm putting them in a position that they could be bitten by, so to speak, if they have to sales pare back, or they lose a big client or a couple key people leave. Now they're kind of floundering. So you want to make sure they're in a good position that way. And then lastly, just kind of like acquisitions.
Hmm.
It's really the same type of thing we just mentioned, kind of those cash flow, leverage, collateral, character. Have you bought a business before? Buying a business is a big risk. I mean, a lot of things can go wrong. Most deals, I mean, you have to kiss a lot of frogs to find a good target. And then even getting through diligence successfully is very difficult at times.
Yeah.
So it's just risky in nature. So banks tend to either shy away from or not lend as much money from a multiple perspective of the EBITDA because, again, things can go wrong. Key people leave at the target, clients leave. I mean, the horror story laundry list is long. So
Yeah.
knowing what you're doing, understanding the why, why are you doing this? That's a big, what's your rationale? Do I buy into that? Does it make sense to meet the bank? Do we see your vision?
Hmm.
Um, and making sure, from your world, like the due diligence and like the agreement perspective, what are the terms? Are you, is it a fair deal? Are you potentially gonna have to pay a huge earn out to someone, or like what's the structure? Like what's the worst case? What does the worst case look like? Because
Yeah.
banks will stress test things like, okay, you say it's going to be this, it's hockey stick growth kind of thing. It's never the case. Um, and so what if sales drop X percent or revenue or margins drop X percent? So they'll stress test it to see how bad can it get and things still be okay. And if there's cushion there and there's room to like weather a storm, so to speak, whether it's economic or just related to the deal itself, then it's going to get done, likely. But if things are tight, it's just going to be more difficult. And with rates as high as they are now, from a year and a half, 2 years ago, you really have to make sure like the synergies and make, the rationale, the why makes some sense because it's just so costly to borrow that much now to make the math work and pencil in. Because, 2 years ago it was so different. And
Yeah.
so it's a different world. Where rates go is a whole nother topic and no one really knows, but you could do a whole podcast about M&A stuff. But I like
Oh,
doing
for
it. It's
sure.
fun. It's interest. Every deal's different. It's not kind of your more basic, there's normal requests for equipment or whatnot. So I like
Yeah.
working on those and bringing in partners like you or others, advisors, CPAs that help your client as a part of that process put themselves in the best position to succeed.
Yeah. No, that's awesome. Thanks for that rundown. That is going to be a ton of value to my clients. When we get into M&A conversations, whether it's purchasing or selling, a lot of times they have questions as in regard to what is the bank looking for, and I touch very high level on what you just discussed, but that was a good second level conversation. I know you can go much more in depth than that, but that was amazing. So we're coming up on time. One thing I wanted to bring out of what you talked about was you talked about corporate. No, you talked about character, and translated into my world, that's corporate governance. Um, when I think about the way that banks used to lend, not like SoFi and all these other
Yeah.
online banks, you know, people used to have to put on a suit. They used to have to go into their local branch where they likely saw the banker at church on Sunday, and they're going to have to say, "Hey, how's the family doing? It's good to meet you, or good to see you again. I want to start a business." And then the banker starts questioning them, and it was always super intimidating. At least in the movies, I wasn't there.
Yeah.
But in the movies, the guy's getting hounded, and he's getting, it's almost like he's on trial for asking to borrow money. And then when the banker said yes, the guy runs home and he's, clicking his heels and he's ecstatic. But when the bank says no, they normally give him a reason. You haven't been in business long enough, or go to school. Like, I think you should be doing this. But it's interesting how you bring up that you guys aren't doing that per se. Times have changed, but character is still an influencing factor in lending. That's amazing. I love that.
Oh, 100%. And if you're like really like starting a brand new company, I guess my only advice would be like start very, very small and just prove the concept. Repeat customers, I wouldn't quit your day job right away. Like I would have the term side hustle gets used a lot, but like as a side gig or side job, yeah, it's going to be a lot of work, but don't take out a second mortgage on your house to like start something because the truth is most companies fail just statistically.
100%.
It's just hard. It's just hard. There's so much competition, especially when you're successful and people catch on, depending on what you're doing, like you potentially bring in more entrants to compete with you, which only makes it more difficult. So start it small, show that it works, and then that's just going to help you more so, access capital if and when you need that from whatever kind of source you find that from.
Yeah, amazing. Well, we're going to
Yeah.
get into, not that banking isn't fun, but we're going to get into a couple fun questions I have. We're
Okay.
coming up on time, but if anyone knows me, they know I'm a golfer.
Yeah.
You are a local of the Palisades, which a lot of people also know as my least favorite course for difficulty. It's beautiful. It's one of the
It
most
is
beautiful
hard.
courses out there,
It
but
is
it's very
hard.
difficult. So my question for you is, what's your favorite golf course? If you could play any course, let's say a course you have played, what's your number one course?
Oh man. I have a bad memory with courses, but I did play
Okay.
St. Andrews,
Oh,
the old
wow.
course, gosh, 11 years ago when I was in college, study abroad at Michigan State. It was
Jeez.
doing a business through golfing study abroad for like a month in the summer. And so I'm like, I need to do this. So
That's
I liked the
amazing.
old course. So that was pretty nice. It was true links style, golf. I know there's links courses here, but
Sure.
that's like the OG original course. So
Yeah.
that was pretty cool. I would play that again if I could.
Okay. Now I've got more questions. We could do an entire podcast on study abroad business, doing business on the golf course. Like that's
Yeah,
amazing.
yeah, it was
So
fun.
my two questions there. One, is it a pretty long course? Because it's in the middle of a city, right? There are
Yeah.
houses everywhere.
So
What
I
do the
didn't,
mishits look like?
there's different tees obviously, so you can make. We didn't play tips, so but
Okay.
you stay up all night. Like it's weird. Like if you live there as a citizen, you can pay like $200 a year and you get access to all there's like 10 courses in the town.
Wow.
And it pays for itself after like basically 2 rounds. But there's like a lottery system if you don't have a tee time scheduled. And if you don't get the lottery, like basically you can just form at the tee box. There's a line of people that show up. We got there at midnight the day before to get in line because they'll basically just take first come, first serve, your name, you get put in a hat or you get put in line. And if you're the first person in line, you're the first person to like get a tee time if someone doesn't show up or is canceled.
Mm,
So locals play it all the time and they'll cancel or they won't show up or whatever. Someone was coming in and didn't make it. So we were like sixth in line and we got a tee time, which was awesome. But right there, 18 green is right left of the one fairway tee box. So there's a lot, it's right at the corner of a town. So it's just a big tourist attraction. There's people walking up and seeing people putt and then people tee off. So I don't know. I don't know how many people were there. In my mind, it was 10,000, but it was probably like 100. And I've never been more nervous in my life, probably doing anything, but especially hitting a golf ball. I
yeah.
mean, I don't even remember it. My hands were like shaking. I was so nervous, like, because all these people are watching me. And I didn't have a registered handicap at the time because they said you had to be at least, I don't know, 14 to play
Jeez.
and or something like that. And my friends were there vouching for me. So like I feel like I shouldn't be on this course to be honest. And I'm like, all these people are watching me. And if you don't know, the number one hole at St. Andrews is the widest fairway in the world.
Oh
And
wow.
so there's this little creek on the right side that just runs, that's kind of like the right boundary. And then it cuts across the fairway like 200 something yards out. So most people lay up with a hybrid. So I just snap hooked it hard right. I'm a lefty. So I go way right, go in the creek. I'm like, oh my gosh, are you? So I drop it. So that's penalty. So I'm hitting my third shot and I clip it clean. I'm only like 110 yards out. I clipped it perfect to like 4 feet and made the
Wow.
par putt. So I miraculously parred the hole, but I was just I played better when people weren't watching me, I guess is what I'm trying to
Sure.
say. So
Sure.
it was fun, but super nerve-wracking.
That's awesome, man. That's awesome. Well, super cool story. We got to have you back on to talk about doing business on the golf course, study abroad. I may go
Yeah.
back to college just to take that course. Last
Yes.
question. Who's your favorite golfer?
Ooh, favorite golfer. I didn't watch golf as much as a fan when Tiger was in his heyday,
Mhm.
which is sad because how awesome he was. So, but I still root for him now a lot. But I really like. Let's see, I like Wyndham Clark, Xander Schauffele. I was a big Spieth guy, and then he kind of just fell off the face of the earth, sadly.
That
Um,
happens.
Rory's okay, but my favorite, I don't know, probably Tiger. Like I love watching him. Even at his age and health, you still think you might see some magic left.
Yeah,
We'll see. He needs to play more, I think, than
I
just the
agree.
majors to like try to have a chance. But probably Spieth if I had to pick one guy. But so hopefully he can come back and play well.
Cool, man. Well, hey, Shane, I really appreciate having you on the podcast. Thanks for all your knowledge. And yeah, man, if anyone wants to get in touch with Shane, you are on LinkedIn. I can send them your email. Um, but
Yes.
yeah, we really appreciate having you on here.
Thanks, Sean. Appreciate it, man.
All right. See ya.
Take care.